Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, as well as our co-host Pedrosa, we're very pleased you joined us for our Small Cap Growth Conference. We'll kick off today's event with a keynote presentation from our co-host Pedrosa, titled Microcaps Must Behave Like Macrocaps, a Philosophy in Investor Relations. And before I introduce our speaker, please note to submit your questions in the question box to the left of the slides. And all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Pedrosa Lopez. He's the Chief Executive Officer of Pedrosa, a global investor relations and financial communications company. Recently published his latest book, The Philosophy of Investor Relations, which you can download via the additional resources section. Welcome, Ra.
Hello, everyone. Thank you for being here. Thank you for joining us. My name is Pedrosa Lopez. I am the principal and founder of Pedrosa IR. And I must confess it is thrilling for me to be today at the Small Cap Virtual Investor Conference, which over time has become one of the fixtures in the OTC market ecosystem. In a few minutes, we will be listening to very valuable investment proposals by some of the most interesting companies trading in the market these days. But prior to that, I'm going to ask for a few minutes of your time to talk about investor relations, to talk about financial communications and how the small caps, companies with a market cap of under $300 million, should behave in terms of IR. But prior to that, I would like to introduce my company. Pedrosa is an independent IR and financial communications boutique. We work out of London with the mission of connecting companies and investors, and we've been doing it for years. We are one of the few European members of the OTC Markets Premium Provider Directory, and we are part of the Investor Relations Society of the UK as well. And our team is currently working in companies and IPOs in markets such as the US, the UK, the European Union, or Australia. And we're very proud of the work we do. And we've found the opportunity to tell how we think, what our ideas are about, how communication between companies and investors should be transparent, consistent, and strong. And I'm going to thank you all for being here again. Let me start with this premise. Small caps and growth companies have at their fingertips the same tools and expertise macrocaps and blue chips have. The difference is many times that they don't know that they have it and how they use those tools. After many years in the business, I've learned that what really makes a difference these days in 2022 between the IR that can be executed by a macrocap and that is executed by a small cap company is no other than gray matter and technology. These days, technology is easily accessible for companies of all sizes. And what really makes a difference is the gray matter. And by gray matter, I mean the strategies we put in place, the way we approach the market, and the ideas through which we find bridges, we build bridges between the companies and the investors. Macrocaps do one thing right and very right. They put resources available at the service of the company's profile raising strategies. You will hear me say profile raising a few times during this talk, because in the end, we believe that investor relations and financial PR are about raising the profile of a company before the investors in a transparent manner, answering the right questions. The reason why we are here today is because we believe there is value to be gained in small caps. Small caps are attractive companies. They tend to outperform their larger counterparts over time, and there is a significant value and significant growth to win from investing in a small cap before in the beginning of the trading history. They bring significant returns, and they are a space where they can be more valuable over time than larger companies. High growth companies sometimes are not well known by analysts, by the market, and that creates opportunities. But it only will create opportunities for informed and nimble investors, for those who are doing the homework. So, having said that, it is a responsibility for management teams of smaller companies with a smaller valuation or a smaller market cap to make sure their investors or the potential investors know what's going on around them so they can unlock that value. In the end, when a company is a high growth company, um, it must be well managed to be attractive for investors. Those of you who are retail investors or institutional investors on the floor will agree with me. High growth companies must be well managed. They must have a solid business plan, but they also must be able to communicate actively in a transparent manner. Investors want to know what you're doing to grow, and they want to be part of your story of growth. And that's what small stocks, small cap stocks, are so well observed by the investor community. I believe, and this is a theory I've been championing for many years, that the spread between the market price of a stock and its fair price, if we understand the fair price as that marked by analysts' consensus, is nothing more than a divergence in communication. I call this the communication gap. There is a gap in knowledge between a company and its investors, and if a company makes the effort of breaching that gap fast, it will see how company increases its liquidity, the market recognizes the value of the company, and of course, the stock price will tend to grow, will tend to climb to the place where it really belongs. So, allow me briefly to show you how this process of bridging the gap between the share price, the stock price, market price, and the fair price should be executed and why. And I want to stop for half a second to remind us of the quote by futurist Alvin Toffler, one of my personal heroes. If you do not have a strategy, you're part of someone else's strategy. As I was mentioning in the beginning, the leverage of technology plus strategy is the secret weapon smaller companies should have to become darlings of the market. Small caps face, in general, the same challenges, and they're perfectly well understood by all of you. They operate in fierce environment. This can be frustrating for management when they see that their levels of liquidity are not strong enough, and by investors who will be the ones suffering the sudden changes in volatility and the drops in the stock price, sometimes incomprehensible. Small caps operate in a fierce environment. And in that environment, what is really important is that your story is good and that it's well disseminated and well told. The reputation and transparency are more important in the small cap space than anywhere else. Investors have access, and again, thanks to technology, to thousands of investment possibilities, from small caps to large caps to crypto to real estate. And they have to absorb, digest enormous amounts of information. Most of them do not have the resources or the time to know what a small company does and who the management is and what the vision is. And that's why it is so important to develop strong IR strategies to make sure your message is well told and well disseminated. Who lives, who dies, who tells your story, as Hamilton musical would sing. And sometimes I've seen there is a problem, and I'm going to call it a problem, in mindset. Smaller companies do not believe they have the resources necessary to identify and engage shareholders, while I want to prove you that they actually do. And this has been proven again and again over time by my peers and ourselves, because all small caps share the same goals. And their strategies, the leverage strategies, should target those goals. They want more investors. They want investors to know the upside potential of the companies. They want sustained stock price growth and liquidity. And I was mentioning to a potential client yesterday that liquidity when a company is small is even more important than stock price. Seeing movement is all that matters in the beginning of your story. Small caps want to raise visibility and increase corporate valuation. They want to attract and they want to retain the support of investors. And they want to use that support to ward off shareholder activists and, control the short sellers, which tend to be a problem every now and then. And for that, they need to build and raise the credible profile in front of the investment community. I have tried to summarize the 5 ideas which I think are key for small cap companies to know when they are building their profile before the investment community and the financial media. Some of you will have different ideas. These are mine, and they are the product of almost 23 years in the financial media and in the IR market. So bear with me and don't hesitate to let me know what you think of after that. My main idea, and one which I repeat again and again, is that there is no investor relations without the right narrative and a good equity story presentation. I believe that prior to getting crazy developing websites, making sure we file anything, companies should take the time to build a perfect equity story presentation. I really believe those of you who are investors and who came here today to listen to the value proposition of my fellow speakers will agree with that. The equity story presentation is the most important element of an IR program, and it deserves time, effort, and a lot of thought. When a company, before doing anything else, makes the effort of putting together a strong narrative, one which combines vision, strategy, financial information, and makes the effort to make sure those around the market who want to invest in the company know about it, know about every single element of it, they will succeed. Equity stories are key to conveying the company's message, and a good equity story presentation should be brief, shouldn't oversell, should be consistent, and should be digestible. We live in 2022 again, and we used to reading 500 word articles in the newspapers. We've grown a lot in the past 20 years, and investors appreciate brevity and clarity. My second idea is that companies should make the effort of making sure the market understands the value they bring to their table. The original premise is that the smaller companies lack visibility, and I mean, no wonder that literally thousand companies listing in OTC markets. And sometimes it is difficult for investors to know what they're getting into if there is no company coverage. Many investors mm, have suffered a lot of scares with the smaller companies. Some of them have had great successes, but in the end, before getting investors to join your company, they need to know you exist. And for that, in this year, and especially since regulations change in the Eurozone in 2018, something they call MiFID II, analyst reports are lighthouses investors follow to know where a company is traveling to. Beyond the poetry, I believe that the second thing a company should do when creating an investor relations program is making sure they are covered, that they engage a proper equity analyst, because without an equity analyst, without research, without coverage, nobody has any idea what your fair price is. And if you do not have any idea what the fair price is, your market, your investors do not know what the fair target price is, and they don't know what they're getting into, if the company is going up or down. Equity research is the key element that will allow investors to benchmark what you're doing towards a foreseeable future. Third point we have to take into consideration is that good investors need answers. They need answers before investing. Investing is someone who is willing to bet his or her hard-earned dollars into your company because he or she believes they will bring value, they will grow, and they will make them money. And that's only natural. And of course, it's pretty reasonable that they are willing to ask questions. So companies, before wasting time, putting irrelevant information to the market just to try to just simply be in the picture, they should use the channels at their disposal to answer a few questions which are relevant. Why should I trust your company and join your mission? That's a very obvious investor question. Happens, well, we see it all the time. What is your vision of the future? Remember that investors bet on vision, not only on charts and financials. And some of the technical questions: how much liquidity your company has, how much cash it can accumulate on the short term, how it is affected by its debt position, what can it do to manage expenses levels, especially in complicated markets such as current one, what actions can it take to ensure its viability, how it plans to protect its key assets in the foreseeable future, how is the company going to be in the market in 5, 10, 15 years. So make sure that once you prepare your equity story and you engage the analyst, that these questions are properly answered all the time, even if the investors hasn't asked for them yet. Idea number 4, And I've been talking about this again and again. We are in the year 2022. We have spent very complicated couple of years. We went together through a pandemic. We are living in an extremely complicated geopolitical context. The market is in a very strange moment. And in that moment, we've learned over time, over the last few years, that technology is not only useful, but it's relevant and we cannot live without it. And if all the industries are digitizing themselves, issuers and small cap listed companies must understand that they can leverage the power of technology. For small caps, liquidity is more important than the price of the shares. And to gain liquidity, you need to convince a large number of marketplaces to trade on your stock. In order to do that, these days we have access to platforms such as Exchange Connect, such as IR Manager, to turbo boost IR strategies with artificial intelligence, with shareholder ID, with market analysis tools. These days, and I was mentioning Exchange Connect, a company of which board I'm a member of. We these days can use artificial intelligence to find out what the market is thinking about us in terms of positive and negative. How many people are investing in your competition? How many investors are buying into somebody else's stock? With companies with platforms such as Exchange Connect, and I will stop the ad here, there is a lot to be done by issuers to engage wider number of investors and thus gain higher levels of liquidity. And finally, and this one is very dear to me because I've spent a very large part of my professional life in different continents, is you always need to combine the technical side of IR with a powerful media presence. There is no company that will become attractive to the market if it's not present in the media, in the financial media and the right channels and forums. In order to invest in your company, investors need to be familiar with its name, with the name of the management team, and with the way they do the work. So even if it's very complicated these days for smaller companies to gain presence in mainstream financial media, we have, again, technological tools that allow us to be widely seen. Put out as many press releases and investors' notes as possible to explain rather than seduce or convince the market. That will happen later. Bet on Globe Newswire, for example, to be your trusted media partner and make sure your story and not only your, like technical regulatory announcements are out. Again, investors want answer to the questions, and press releases are a way not to tell things without without direction, but to answer the questions of the investors. Sorry. While the financial media is overloaded, I was saying trust press releases, dissemination platforms to do so. The wire services, the investment firms, Reddit, the Wall Street bets, feed on them. And mastering them is an important side of the IR business. I like blitz communication based on actionable market info. Putting out 50 to 60 press releases a year will gain you the goodwill of investors more than if you put none or you put one. So trust the system. I'm almost finishing. I want you to listen to the investment proposals of my peers today. But I want to leave you with a final thought, and this is directed to the CEOs, CFOs, Vice President of IR of small cap listed companies uh, in different markets of the world. All things being equal, someone I respect a lot said, the quality of investor relations is the real competitive differentiator that will result in higher valuation, more investors, higher levels of liquidity, improved market and public reputation. And once more, strategy and technology are the cornerstone of this. Try to spend 80% of your strength building the right narrative, gray matter, creative thinking, listening to the market, understanding what investors want to know about your company, and 20% in building a strong tech research and dissemination system. The market will do the rest by itself. So think of the investors you will have a year from now. Trust us if you need any kind of help in that. And for the geeks out there, there is a Doctor Who quote which I use all the time when talking about the stock market. We're all stories in the end. Just make it a good one. So thank you very much. I really hope you will enjoy the event today. That we will meet again. And on your way out, do not hesitate to grab my latest book, Philosophy of Investor Relations, which I believe is accessible to everyone who has registered to the conference. Thank you very much.